Hey guys, JJ here from SchoolOfTrade.com. It's March 8th, 2010. Here's your live trade and recap. Before we talk about the trades we took today, guys, we had a pretty good day in the room this morning. I want to remind you guys about the 3 important links in the description of the YouTube video. First one's for our 12-month track record, see how we've done the past 12 months. Second link is for our live trade room access. And the third link, guys, takes you right to our blog. Our blog, we have 2 brand new articles in the month of March, guys. One on speed trading, and on March 1st, it was on the dollar index futures. So make sure you guys read those articles. Lots more information about trade management, the discipline cycle workshop on the blog. So use those 3 links right there, guys. Let's see, 4 trades this morning, guys. You see 3 on gold, 1 on crude, 83 ticks, 830 USD, and of course only 4 contracts needed to make that all happen today. We've got over $700 and $2,800 in the month of March so far. We'll keep you guys posted. Now, what was the most important thing that happened today? Well, of course, today was a Monday, so we expected things to be a little bit slow, right? Typical Monday. And we looked for clues in the market this morning. Now, if you're with us this morning at 8 o'clock, we went through all of our prep for the work for the day ahead. We looked for clues in the market, and we saw these things happen in our charts. What did we see? We saw flat trigger lines on crude at 8 o'clock. Right, flat trigger lines, sideways markets on crude at 8:30. We then saw on gold and crude, the pace of a tape was red, but it was really slow, less than 100. We saw the dollar at 9 o'clock was very flat and sluggish. And so basically what this tells us is it's a typical Monday. But a typical Monday being we had to wait patiently for the market to wake up today. Just like you and I don't want to get out of bed on Monday mornings, the market is very similar to that. Now, we saw this happen though on the pound this morning. While we were watching for clues in the markets, we were identifying support and resistance here in our slower time from the pound. And what we noticed was we had double tops and double bottoms here in the pound. Now, that's not the big thing here, right? The big thing was that we were looking for, right, double tops up top here, double bottoms down bottom here. But the interesting thing is look at where these double tops are. 5,200, right? Big round number. What about down bottom here? 5,100. Okay, so double tops and double bottoms at big round numbers. Now, we already knew we had low volume this morning. Now, why would we be concerned if we have double tops and double bottoms at big round numbers? Well, let me draw an example for you here. Right? Think of this as your sideways range. Right? If I'm an institutional investor here, and I'm looking, of course, to break out of or to try to break out of this range here, okay, if I don't see enough buy pressure in the market, I'm going to be a seller looking for some sort of resistance. And if all I have to work with is those big round numbers, that's because there's nothing else in the market that's worth my time. Remember, guys, I'm a big seller. I'm a big buyer, a big seller. Okay, so when price tries, of course, big buyers are looking for resistance, looking to break above resistance, right, to take that long trade. Well, of course, if they're looking to find overhead resistance and there isn't any, they're going to default to that big round number. Same thing on the bottom, right? If they're looking for support, and there's nothing out there, right? There's not enough volume in the market to push price above or below. Traders will default to those big round numbers, 5,100 and 5,200. All right, guys, so just kind of a good example there this morning. What we saw on the pound, big round numbers, double tops, double bottoms, that's going to mean be careful out there. All right, now we took 4 trades today, guys, 3 of which came here on gold back to back to back. Now, I want to show you guys something very important here on these trades here on crude, because what happened this morning is the way in which we got into our trades and then got out of our trades is really the reason why we emotionally were in a position to take these profitable trades this morning. All right, now let's take a look here. The first trade of this morning here on the gold, just after 10 o'clock, short-term trend coming down. We have the low of day here. What are we always thinking? A bounce off the low of day. We mark up our swing high. We bounce above that swing high at 10.02 on the gold for a 2-step pattern long. 23.9 was the fill. We got our +5, our +8, and +21 for 39 ticks. Now, how do we get that, though? Well, normally we have a +4. We got a lucky bounce there, got +5. Second target of +8, and then we trail our stop to lock in those 21 ticks on the runner. We spent almost 3 minutes in this trade, which for us is almost a lifetime. If you guys have been with us for a while now, we saw green pace of a tape, which means we used the pink line on my trade management chart to manage this position. So what happened was, again, we come down off the low of day. We expect, of course, at the low of day for a bounce of some sorts. We look for the 2-step pattern long. We break above that swing high here. We take our +5, +8, and then we use, because we had green pace of a tape, right, fast price action, we're going to use that pink line on my trade management chart And we did that. We trailed the stop all the way up here, guys, locking in lots more profit. And what happened was we got all the way up 21 ticks, guys. Add them all up, guys. 2 off at 5, 1 off at 8, 1 off at 21, 39 ticks or 390 USD for the first trade of the morning here. Now watch what happens, though. At these highs up here at 27s, what do we see? Well, we began, of course, to look for a breaker pattern long here above 27s, but we didn't see anything. We looked for a two-step short, but the problem was we had less than 6 ticks here because we had a level here at 25.3. So not enough room here to take a two-step short. We had to wait for the break below that level, which is right there. We got in short here for a breaker pattern short at 10.22 on the gold. 25 even was the fill. Now what happens is, guys, if we get into a trade and we realize, boy, I either made a bad decision or price is not moving the way it needs to go, I know right away, move that stop to entry and look to protect your capital first. We call that the 5-second rule. So I get in short here, guys, 25 even at 10.22 past the hour, looking for a short trade here, going with the trend, a break below that red line. And of course, after 5 seconds, we don't see anything happen. Move our stop to entry. And as you can see, it reverses right back against us. Now, what would have happened, guys, if I wouldn't have known what to look for? What would have happened if I would have stayed in this second trade? I would have given back about 24 ticks of that 30 that I made. Okay, so I made 39 ticks down bottom here. I would have given back 24 of those ticks, and I probably wouldn't have been in a mental position to take the third and final trade. And that's really what the point is here. Okay, if I would have just simply sat there and let that gold trade stop me out, it probably would have killed all the confidence that I had, and then I wouldn't have been able to take this break below the next swing low. Right, nice re-entry here, 10.32 on the gold. This breaker short, 23.8. We got a nice big winner on this one, right? +4. Move our stop down to entry +1, and we get taken out for 10 ticks. So we made 10 ticks, of course, on the third trade. We were able to take that third trade because we were in an emotional position where we could get into it because we didn't lose any money on the second trade. So 39 ticks in the first trade, 10 ticks. That's almost 50 ticks there, guys, in a matter of, as you can see, 30 minutes. Then we wrapped up, of course, here on the crude, the final trade of the morning here on crude. Once again, short-term trend is down. In this case, though, we saw the breaker short into the low of day. So there's your low of day there. Now, we expect to see the bounce. However, we can take the short trade into the low of day, guys, if we see what? Green pace of a tape, momentum pointing down, big money on the sell side. We saw that happen. We broke below that swing low. And there you go. So, of course, 11.16, breaker short, 81.55 was the entry. We made sure, because it was at the low of day, we made sure we had the green pace of the tape, the momentum curling, and the big sellers. Got a little bit luckier, guys. 81.55 was the fill. Got our +4. Turned into a +8. So we got +8, take 2 off at 8, take 1 off at 8, and then trail to stop for 10 more ticks, 34 ticks or 340 USD. Now, guys, you can see here, between 10 o'clock and 11:15, we had put 83 ticks into our pocket. All right, guys, all because we knew how to exit those trades correctly, guys. The best way to get good entries is to have good exits. And a great example here, guys, on gold and crude. So add them all up today. The trades that I called live here in the room, 83 ticks, 830 USD.